What's up everyone, it's KH here, and today we're talking about something that can completely change your financial life, investing. Specifically, what to do with $10,000 to make it grow. That's right, if you've got 10 grand sitting around, you've got options. Don't let it just sit in a low-yield savings account, losing value to inflation. We're going to explore some smart ways to invest that money and set yourself up for a brighter financial future. The first strategy we're diving into is building a diversified stock portfolio. And no, you don't need to be a Wall Street whiz to do this. We're talking about spreading your money across different stocks to reduce risk. Think of it like this. You wouldn't put all your eggs in one basket, right? Same goes for your investments. Now, index funds and ETFs are your best friends here. They let you buy into a basket of stocks, giving you instant diversification. For example, the S&P 500 tracks the performance of 500 of the largest US companies. Investing in an S&P 500 index fund means you're getting exposure to all those companies. Low cost, easy to manage, and historically solid returns. That's the beauty of index funds and ETFs. Remember, investing in the stock market always carries some level of risk. Past performance doesn't guarantee future returns, but over the long term the stock market has consistently trended upwards. So, if you're looking for potential growth and can stomach some ups and downs, a diversified stock portfolio could be a great option for a portion of your $10,000. Ever dreamt of owning a piece of that fancy downtown high-rise? Well, with real estate crowdfunding you can make it a reality, even with a smaller budget. Gone are the days when you needed hundreds of thousands of dollars to invest in property. Crowdfunding platforms pool money from multiple investors to buy large-scale real estate projects. You become a partial owner, enjoying potential rental income and property appreciation. The best part? You can diversify across different property types and locations, residential, commercial, even those trendy vacation rentals. The choices are endless. But remember, like any investment, real estate crowdfunding has its risks. Property values can fluctuate, and there's always the possibility of vacancies. Do your research, choose reputable platforms, and diversify your investments. If you're looking for a way to tap into the real estate market without the headaches of traditional property ownership, real estate crowdfunding could be a smart move for a portion of your $10,000. Now let's talk about putting your money to work by lending it to others through peer-to-peer lending platforms. These platforms cut out the traditional banks, connecting borrowers directly with investors like you. Want to help someone start a small business? Or maybe consolidate their debt at a lower rate? With peer-to-peer lending you can do that while potentially earning higher returns than traditional savings accounts. You choose the loans you want to fund based on risk tolerance and interest rates. Of course, there's always the risk that borrowers might default on their loans. That's why it's crucial to diversify your investments across multiple borrowers to minimize potential losses. Carefully assess borrowers' creditworthiness and choose platforms with strong track records. If you're comfortable with a bit more risk and want to potentially earn higher returns, allocating a portion of your $10,000 to peer-to-peer lending could be a savvy move. Now, while we all love the idea of high returns, it's equally important to prioritize safety and stability for a portion of your money. That's where high-yield savings accounts and certificates of deposit, or CDs, come in. They might not offer the highest returns compared to other investments, but they provide something invaluable: peace of mind. High-yield savings accounts offer a higher interest rate than traditional savings accounts, while keeping your money readily accessible. CDs typically offer even higher rates, but you agree to keep your money invested for a fixed period. The trade-off? Less liquidity, but potentially higher returns. Shop around for the best rates and FDIC insurance, which protects your deposits up to $250,000 per depositor, per insured bank. Remember, with inflation being a real concern, even high-yield options might not fully outpace it. But, for a portion of your $10,000 that you want to keep safe and liquid, high-yield savings accounts and CDs are solid options. Let's talk about the long game, retirement. It might seem far away, but trust me, the earlier you start, the better. And a Roth IRA is a fantastic tool to build that retirement nest egg, even with a small amount like $10,000. With a Roth IRA, you contribute after-tax dollars, meaning your money grows tax-free, and you don't pay taxes on withdrawals during retirement. It's like planting a seed that grows into a beautiful, tax-sheltered tree of money. You can contribute up to $6,500 per year if you're under age 50 in 2023. Now, because you're investing for the long haul, you can choose investment options with growth potential, like stocks or index funds. Remember, with a Roth IRA, you can't withdraw your earnings before age 59 and a half without penalty, so it's a long-term commitment. But the tax advantages and potential for compounded growth make it a powerful tool for building a comfortable retirement. So there you have it, 5 smart ways to invest $10,000 and start building real wealth. Remember, the key here is diversification. Don't put all your eggs in one basket. Spread your risk, explore different options, and find what aligns best with your financial goals and risk tolerance. Remember, the key to successful investing is diversification and patience. Start small, stay informed, and watch your money grow.